program. This is Financial Focus, brought to you by the best of the best in financial services, 9 straight years and running, as named by the readers of the Lake City Reporter. They are the team from GulfCoast Financial Services, celebrating more than 31 years and helping proactive North Central Florida savers and investors formulate those plans and achieve those financial and retirement goals. Founder and CEO John Kuykendall here with us as always. And John, the interest rate environment over the past 2 years is significantly different. Over the past 2 years, the Federal Open Market Committee, the Fed Reserve, the FOMC, has raised interest rates 11 times, bringing us to our current environment with their target rate between 5.25% and 5.5%. On one hand, we heard a lot about this slowing down the housing market. On the other hand, maybe a good time to look at interest rates for savers and those looking for income.
Well, that's right, Peter. I mean, you got to realize that this is the highest in interest rates that we've paid at banks and with fixed annuities since probably the mid-90s. So it's certainly a great time for investors to pick up more interest income and to take advantage of this, what I think is going to be a short-term wave. I don't think interest rates can stay up forever due to the amount of debt that our country owes. It just cost us too much money for us to continue to pay higher rates on our debt. But it is a great time for savers. On the other hand, as you mentioned, it's a really bad time for homeowners because now we can't afford as much home as we could before. And prices here, I don't know how they are in the rest of the country, but in Florida, interest prices have gone up dramatically on homes. And so therefore people can't afford as much home. And we're finding a lot of new home buyers have been taken out of the market.
John, we're always taught that we need to take some amount of risk in order to get growth on our money. But I think a lot of investors, maybe more moderate to conservative minded investors, are looking at that risk reward ratio and maybe a little concerned that taking the risk is not worth the potential reward, especially when we can get these current interest rates without taking as much risk.
Well, that's right, Peter. When you're looking at being able to get 5.5% on a money market account, or as much as 6% on a CD, that's higher than we've ever had before. When you look back since the 90s, if you look back before we started this interest rate increase environment, we were paying almost nothing at the bank, and therefore your money wasn't earning. You know, at 5%, your money's going to grow a lot faster than if I was only getting paid 1%. And so it just makes sense for certain older investors, people who don't have the time to make up the loss in the market or don't want to take the risk, for them to be invested in these CD rates and money market rates.
John, I know I used to hear a phrase a lot: protect the principal and live off of the interest. And really for the last 15 to 20 years, I have not heard that phrase very often. Are we back in a place where this is a relevant term?
Well, I think it is. It's more relevant now than it has been in the last 20 years. But certainly, Peter, with inflation and the rising price of living, the cost of living, we need to still maintain diversity. We need to be somewhat in the market, and we also need to take advantage of these short-term rates. You got to remember, I read this morning that if you retired 3 years ago and you had $500,000 for your retirement, you need $600,000 to have the same type of retirement. So that's $100,000 more that I should have saved in just 3 years, or $33,000 a year. So you can see that we have to keep up with inflation. And so we can't afford to put all of our money into one basket.
Because things have gotten that much more expensive with the inflation that we've seen over the last several years.
Oh, yeah. I mean, inflation's driving everything. I mean, Peter, I went to the grocery store the other day and I really love this cherry vanilla ice cream. and it's got the real red cherries, and you can't find it all the time. And I went and I saw it in the store, and I went to the counter. I opened it up, and I looked. It was $10 for a container. That ice cream was less than five, was a little over $5 not that long ago. And so prices are going up, prices are raising. We have to maintain our living standard. So therefore we have to be more diversified and do more things than we used to do. Certainly we should take advantage of these interest rates. That's just one tool in our tool belt, but we need to have more than one tool if we're going to build a nest egg and a foundation for our retirement.
Now, over the last couple of years, John, inflation has certainly spiked and been higher than it has by a significant amount traditionally. But even under more normal times, inflation is not a factor to ignore.
No, it never has been. You got to remember that inflation historically is almost 4%. So we have had inflation. People don't realize that. I mean, when you think back and think what you used to pay for stuff and what we're paying for stuff now, certainly inflation has continued to increase. And with the rising cost of labor, the rising cost of goods, material to make goods, therefore things are going to continue to go up. We're going to continue to have inflation, and we need to make sure that we keep up with that in order to have the type of retirement that we want. And that's why we do the financially focused income plan. We want to look at what your needs are. We want to cover those with guaranteed predictable income. And then we want to make sure that we have a growth bucket that's going to take care of us for the inflation and the other things that are going to come along.
And again, John, because of the inflation, we are seeing these higher interest rates, but two sides to that coin: the higher interest rates for more conservatively minded investors, maybe even moderate to moderately conservative investors, or those that just have some money they do not want to place some risk on. These higher interest rates are allowing for some better opportunities than they have really for the last 15 to 20 years.
Yeah, and we need to take advantage of that. But remember, I still think that this is going to be short-lived and that rates will go down in the future because we can't afford to continue to pay high interest rates on the debt that we owe. You got to remember, the United States owes more money than it's ever owed in our history. The amount of debt has increased almost triple since 2008. We can't afford to keep interest rates up, but while they're here, let's take advantage of them.
Yeah. And that, by the way, is both at a national debt level and personal debt, also in 2023, reaching those record levels. John, not only the interest rates, but another factor, specifically something that retirees look for, is the cash flow or the income rate that they can generate from a portfolio also has improved significantly as a result of these now available interest rates.
Well, that's right, Peter. If I've got $500,000 in a retirement fund, and if I can get 6% on that money, I can pull out $30,000 a year and not touch the principal. In the past, with the interest rates less than 1%, I couldn't do that. So this really makes it easier on people to kind of figure out where their income is. And it makes it a time for us to really work on that income plan and make sure that we can give them those interest rates for a longer period of time during their retirement.
Yep. Well, if you are looking for interest on more conservative money, or if you are looking for income generation tools, now may be a good time, an opportune moment to shop around a little bit, take a look at what is out there. And John Kuykendall and the team from GulfCoast Financial Services certainly can help you do that. Now, that is part of a larger planning process, putting together that financially focused written retirement income plan, ladies and gentlemen. And if you'd like to take a look at what is out there and available, or if you'd like to get your plan put together, all you got to do is start with a phone call to Gulf Coast Financial Services, 386-755-9018. That is 386-755-9018, 386-755-9018. And John, I know that you've got your newest book, Quitting is for Winners, but Retirement is Not for Wimps. And you have that available for listeners and viewers to the program as well.
That's right, Peter. Those books are in, and we're really excited to get them out. I'm really excited about that book. But don't forget that as we approach the end of the year, now is the time that we need to look at our taxes and do some tax planning for next year. Look at Roth conversions if we can do those this year and not affect our tax rates. Now's the time to do it. We can't wait till after the end of the year and then do tax planning for 2023. We have to start now.
Planning indicates proactive, doing things ahead of time, looking forward. So let's make sure that we get a jump on that, ladies and gentlemen, because the year end can be deadlines for certain tax maneuvers and strategies. And you've got to execute and complete some of those before the end of the year, which means the time to get started on those, that's now. So pick up the phone, give a call, 386-755-9018, 386-755-9018. John, we always appreciate the time and the information that you share for those proactive planners, savers, and investors across North Central Florida here on Financially Focused.
Thank you, Peter. Great to be here. See you next week. Hey, if you'd like a copy of our new book, Quitting is for Winners, but Retirement's Not for Wimps, I encourage you to click the link below and get your copy today. Hey, we like it when you listen to the show, but we like it better when you like, share, subscribe, or feel free to leave a comment.
Be sure to like, subscribe, share, and tune in for more financial focus by visiting GulfCoastFinancial.net. The information presented on this program is provided for informational purposes only, without warranty of accuracy, completeness, or suitability for a particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature and not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes. John Kuykendall is registered with and securities are offered through Kovac Securities, Inc., member FINRA SIPC, found online at www.kovacsecurities.com. Advisory services are offered through Gulf Coast Financial Services, Inc., a registered investment advisor in Florida. Gulf Coast Financial Services, Inc. is not affiliated with Kovac Securities, Inc. or Kovac Advisors, Inc. Past performance is not indicative of future results. All investing involves risk. Investment decisions should be based on your own goals, time horizon, and tolerance for risk. Due to various factors, including changing market conditions and/or applicable laws, the content may no longer be reflective of current opinions or positions.